All right. I hope you can see the screen. So, F3 financial strategy, obviously, very important for your exams, especially the questions like financial strategy, equity, debt is there in almost every exams. Okay. So what we will be doing is we don't have the pre-scene yet, but still we'll try to consider some of the scenarios. What will be the best case and what we should use in that scenario. Okay. So as we were discussing yesterday also, first we'll try to understand what are the fundamentals of that, and secondly, we'll be working on application of that. Okay. There are very few things which you actually need to remember. Most of the things are just understanding. Okay. And if you can understand and relate to the real world example, it will be easier to remember. Okay. So we'll start with the first chapter, that is strategic financial objectives. So first chapter is basically is more about introduction to the type of companies, some of the terminologies, maybe a lot of these things you're already aware of, but we can just still go through it. Okay. Vishal, hello Vishal, can you hear me?
Yes, Misbah, sorry. One few minutes late, please.
No problem, we have not started, just starting in a minute now. Okay, so the first chapter is strategic financial objectives. This is very important. So one more thing you need to realize is in all papers, all three pillars, E, P, and F, you'll notice that though we have lot of chapters, but actually it is one big chapter, I would say, different section, I would call it, not chapter, because everything is connected. Now if you want to understand the first chapter, you need to have the idea of first chapter first, then second, then third. Everything is building up, it's all connected. Let's say if you want to start directly with the last chapter, it will be difficult to understand. It's all building up. Same thing in other P3 also, E3 also. So building up is very important. Okay. So terminologies. First is what are the basic terms in financial strategy? Okay. First is the mission. So basically, what is mission? Mission is any company's reason why they exist, right? What are the reasons for them to do the business? Obviously, most of the business are profit making. They cannot say we are here to make profit. What is extra you want to do? What is different for you? And obviously mission for profit will be different, for non for profit will be different, right? So fundamental objectives of an entity expressed in general terms. So basically this is a one liner, or sometime it can go up to a page to give a detail about what company is doing. Sometime it will be a exact detail, sometime it will be different. They'll just say we want to add value to our clients, but once you go in detail you'll understand what type of business they are doing. What are the advantages of having a mission? Yesterday also we have seen mission for safe wealth. So advantage of mission is it will keep you on track. It will give you an idea what is our goal, why we exist. Especially in startups, they don't have a fixed mission, or even if they have, just because of survival, they will get deviated from their goal. They'll not have a proper track. So mission and even vision to that extent will keep them on track. Next is objectives. Objectives also we can say the goal. Arrangement of the objectives of an entity into a number of different levels, with higher levels being more general and the lower levels being more specific. So objectives are goals, right? For example, in 2 years we want to achieve this, in 5 years we want to achieve this. Why they're saying higher level being general and lower level more specific? Because they want to measure it. So in lower level, usually, maybe you must have seen in your work experience also, uh, companies usually give KPIs, key performance indicators, and that is in numbers, in percentage. Why? They want to measure it. They want to give target to the employees. That is more at operational level. But from the higher level, it is not that way. They just want to grow the business. They want to be a market leader, or they want to launch certain number of projects. So basically, you'll have our objectives. Then based on that, we'll subdivide our targets and ultimately to the KPIs. If we see that KPIs are not being achieved, key performance indicators are not being achieved at the operational level, definitely the objectives on the top will also fail. So I'll connect it. Then for profit and non for profit. Obviously, for profit businesses are here to make money. In CIMA, 98% of the scenarios will get for profit businesses. Companies which operate for profit. Their primary aim is for profit, right? However, recently, we'll see in the coming chapter also, there has been a lot of a debate. They are saying, we can even call it bottom line. What is the bottom line of a business? It's to earn money, earn profit. For whom? For the owners, for the shareholders. However, now a lot of debate has been coming up, and new organizations are pushing that companies should not have a bottom line only for profit. In fact, they should have triple bottom line. What is a triple bottom line? They're calling it three P's. Okay, profit is fine, but apart from profit, you should have people and planet. That means company should also be responsible for helping the people, the society they operate in. And last one is planet. Planet is environment. So you should not only reduce your negative impact, but you should have a lot of positive impact on the planet. So that is what the uh, future is about for profit entities. In fact, United Nations is also pushing companies for that. They have launched United Nations Sustainable Development Goals (UNSDGs). We'll see in the coming chapters. However, it is not a requirement anywhere in the world. It's not a regulation. It's just a motivation. It's just an guidance. However, certain companies they still following some of that to improve their reputation. For example, Nike was doing it, and what was that? Apple was there, Samsung was there. Certain companies were actually doing it to a certain extent. Next is non-for-profit entities. Most public sector entities operate on a non-for-profit basis. In that, they usually have other primary objectives, often non-financial nature. So, non-financial or non-for-profit entities. Firstly, there is a misconception that non-for-profit entities don't charge. They do charge. They need money. Do they have financial goals? Yes, they do have. For example, CIMA. CIMA is not-for-profit, but they do charge fees for you, exemption fees for you. Why? Because they have their own expenses. They have to pay the salaries. They have to have their fixed and variable expenses to cover for. However, ultimately, their stakeholders will not be happy if they show that okay, this year we have saved this much money, we have earned this much profit. No, yeah, it's more about benefiting the community, benefiting the people. There may be certain different cases here. Actually, evaluating the performance for non-for-profit can be different. Why? Because the people who are paying it, they are not the one who is receiving it. Some cases they are, some cases they are not. For example, CIMA, if I say, yes, students who are paying the fees or exemption, they are getting that. But if it is a charitable institute, maybe you are giving the charity and somebody else is getting the benefit. So evaluating it is a very big problem. Now, why we need to know this? Because non-for-profit is one of our stakeholders. We have to do CSR activities. How we'll do that? We'll do it through non-for-profit. So we need to understand how non-for-profit operates. Especially during COVID time and before that, a lot of non-for-profit companies have realized they are just depending on profit companies to give them the charities. But the problem is, if they don't give them the money, they have their own expenses and they are struggling. So nowadays, even non-for-profit are starting some kind of profit-making business. But the primary aim is just to use that money for the business, not for their own benefit or not for the shareholders. However, that is a big debate. Maybe I like to know from you, what is your guys' point of view? Do you think non-for-profit should have their own profit-making business so that they'll earn money and then benefit the user or society rather than waiting for other companies or the government to give them grant or some kind of fund? What do you think?
I think it should be break even, Misbah. So, for example, I mean, in a company, there's a separate entity like a non-profit making company. So at least whatever they are, they at least they need to earn whatever their expenses, and dependency on the other legal entities who are profit making. That's basically a contribution from the profit making companies. To answer to your question, I mean whether the not for making companies require the profit or the revenue. Yes, to the extent of the operating expenses.
Makes sense. Any other view?
In my opinion, non-profit organizations should not like if they have to earn profit, the modes of finances which a company has are like debt and equity. If you go into debt, you have to cater interest, and if you take equity, you have to always please the shareholders, the stakeholders at the bottom level. So I would say the donation thing is much better in a non-profit organization thing, but but they can have a alternative line of business which is not totally related, and they can show a thing of investment or a CSR thing which is going to that non-profit NPO. So this is my outlook.
Right.
The profit organization or non-profit organization, they need the money. In order to run the money, rather than focusing on the other business, they can, depending on the donors or other charities or government grants, is better. My point of view. Then they can do the well their activities. They can perform well.
Right. So you are saying that we should not, the non-for-profit should not get distracted. They should work on their.
Yeah, they should be. They can achieve their goals. Non-profit organization, they want to do any charity work, they can focus on that one. They can achieve the goal rather than go for the profit and diversify the business.
Right. There is high chance they can get carried away. So we have, plus and minuses, pros and cons. Most of the questions you will see here in case studies about evaluate, discussion. So you have to create an argument. You have to talk from both the perspective. Maybe some of you can recommend in favor, some of you can recommend against it. Both are correct. How you justify what points you put forward will give you the marks. It's not one correct answer. For one question, we can have hundreds of correct answers, hundreds, not two, three, four, because everybody has a different view. Anyways, then moving forward, unincorporated and incorporated entities. So basically, unincorporated entities are sole traders or partnerships, small kind of businesses. Incorporate are bigger companies, a separate entity from its owner. Like we have private limited, LLP, and even companies so big like who are listed. So there is a will between the owner and the business. Their personal liability cannot be taken away. Then we have quoted and unquoted. We can call it listed, unlisted, or we can call it floated entity. Floating, quoted, listed is all one and the same. Obviously, this is an incorporated business. An incorporated company can apply to stock exchange to have its share quoted on the exchange. It helps to raise finance. However, it's expensive to be listed on the stock exchange, and large companies mostly do it. So sometimes, in the rare scenario, actually, in one of the exam, they were asking a listed company want to get delisted. We have a company which was listed. Now we want to make it private limited business. So what are the advantages and disadvantages of being a listed company? Or sometimes our company is not listed. Now we want to go for listing. And unlisted companies. And this advantage and disadvantage will also help us to do the acquisition. As I was telling you yesterday, acquisition is one of the most common question. So usually we are a listed company in most of the scenario, and when we acquire a smaller company which is unlisted. So when it's unlisted, valuing that unlisted become little bit of headache, because If it's a listed company, you'll see, okay, number of shares and share price, you'll get a good idea. But when it's unlisted, there are so many other factors you need to consider. Or sometimes they might give a scenario where you have two options. One is listed, one is unlisted, and both are of similar size. So shall we acquire them or not? Or which one we should do? So these are just basic build up for you. Then private sector and public sector. Obviously, private sector entities owned by private investors, individuals, all of those. Public sector is government of a country, government organization. Many times, government is selling their property to private, or sometimes they are taking over private and making it public entity, because government is actually the godfather. They have the highest level of power to do that. So we need to be very careful. When we'll study the stakeholder management also, we'll come back to the government. Having good relationship with the government becomes super important. Next is charitable entities. Charitable entity is a type of non-for-profit entity. It differs from other types. So basically charitable, we have discussed non-for-profit, but charitable is little bit different, like we was just discussing. In other type of thing, maybe the people who are paying, they are getting the benefit, or that is working for a different thing. But here charitable is just specifically for charity. Like we have Oxfam, what they are doing, they want to help people get out of poverty. Then we have other things like Red Cross, they are helping for medical issues and all, same thing. Then we have associations. An association or union is a group of individuals who enter into agreement from an entity to accomplish a purpose. So CIMA will be mostly a part of association. It's not for profit, but specifically if you say it's an association, Global Association of Certified Professional Accountant, we call it, right? Then we have stakeholders. So who are stakeholders? Every business will have stakeholders. Ultimately, managing a business is managing stakeholders. Like yesterday we were discussing, as an employee, what are our expectations? So we have so many of expectations. At the same time, the employer will have so many expectations from us. Then the supplier will have so many expectations. The finance provider will have so much of expectations. The shareholders will have expectations of higher profit. So it becomes very, very difficult to manage all of them, or manage all of them at once. So we need to make a strategy to manage them. For example, we can give them preference step by step, or sometimes we can give them preference based on their power, or sometimes we'll give more power to the, or more priority to the shareholders, the owners. Depend. Those person entities that have an interest in the strategy of an entity, stakeholders normally include shareholders, customers, local community, non-for-profit entities. Previously there was not so much influence of the local community, non-for-profit. For example, non-for-profit, we have NGOs, non-government organizations. But nowadays, because CIMA is just focusing on the real world, you'll notice this NGO has so much of pressure. They can easily get involved the government, they can easily get involved the media, right? And they can tarnish the company's reputation. So we need to be very careful that we have good relationship with the NGOs. How we can have good relationship? We have to give them some kind of benefit. We need to uh, align with their goals. Let's say some NGOs are working for the local community, then we need to be part of it. Some of them is working on environmental issues. We need to be part of that. It's expected. In fact, sometimes it can become extreme. In COVID times, you must have noticed people were going on, Twitter, and they are just tagging big companies and being very rude. You have earned so much of money. Why are you not helping back the society? A lot of people and company actually gave a lot of charity, but still people were angry. So they do have expectations, and it's not only in one part of the world, but throughout. People will actually expect from the company to do something, and having relationship with NGOs become super important. Any question on this? There may be a lot of other terms, but these are some of the basic. Maybe you guys know these were not something new, but I'm just trying to give you an idea how it is linked to our case. Okay. Any question? You can stop me anytime. Next is shareholder conflict, or we can say agency theory, agency problem. This is a important term. So basically, who is the owner of the business? The shareholders are the owner of the business. And who is agent? Like you guys are senior finance manager. You're reporting to the board, right? You're a part of the core team. You're part of a strategic team, right? So you are the agents. You are the agents working for the owners. Who are the owners? The shareholders. So what has been happening in a lot of times, in fact, in a lot of financial crisis, or a lot of time when companies uh, went into bankruptcy, or a lot of other issues, there was a conflict of interest. So what was happening? The owners are shareholders; they are putting the money, and agents are employees. So agents actually started working for themselves. They started being selfish rather than thinking for the owners, and ultimately that led to the problem. Yes, Megha.
Uh, Misbah, is there any means in the past exam, CIMA has given as non-profitable entity as a case study?
No, Meg, I don't remember any time they have given non-for-profit. But in the questions, they have asked many times that we have issue with the NGOs and all.
Okay.
I think they give for-profit because it is easier for them to test so many things on the
Hmm.
finance and what we are studying in this model. If they do non-for-profit, it might be a little difficult for them to test because ultimately it's an exam. However, there is a chance.
Okay.
Yes, Vishal, association with NGOs has been tested a couple of times. So it's very important to understand how they uh, operate. For example, if I just go back to that, the biggest problem for non-for-profit is generating money. They don't know how to do because they have so much of expenses. One of my contact, that lady was president for Leprosy Society. Okay, they were getting in India. Okay, they were getting some fixed funds from a company in UK. What happened post Brexit when the UK was out of Europe? So suddenly the pound fell almost 30%. So because of that, what they were receiving for Indian currency, it was 1 pound was like 100 rupees. So that time it came around 70. So they got almost 30% less money for 1 or 2 years. During that time they were like they don't have money for even fixed expenses, and they have to let go a lot of employees. And after that they were struggling so much they even thought of that we should stop it. So a lot of issues like that will affect. So the biggest problem for non-for-profit is also generating cash, because no company can guarantee. They might support, but imagine the company itself is going in loss, then they will not have commitment towards this. And they also have so much of competition. If you talk about in India we have 2% as CSR, that is mandatory, but most of the countries doesn't have it. Even in that 2%, there are so many other competitors sitting there. They have the bigger brand value, so they will have their own challenges. So we have to see, ultimately companies when they do these kind of things, they want to do in a way which can help them back. There may be ethical question, but obviously they want to use that as a marketing. They want to be showing this to people. For example, if it is a Nike or Adidas, sporting brands, they will do more with the playgrounds and directly indirectly to their customers, current customers or future customers. So this is how they do it. Okay, coming back to this. So a conflict may arise when the agents started working for themselves. So how the agent can work for themselves? Let's take an example. When we decide in remuneration for directors, many times it's linked to profit. it linked to current year things. So what they can do, they will not invest in capital expenses. They will try to be short term. If you are giving them remuneration based on the profit, they will have a short term view, and they will not invest in the long term, or they will not have a bigger vision or the longer vision. Why? Because if they show higher profit this year, they'll get higher remuneration. But if you notice, this is not good for the company. Companies need to have a long term view. Otherwise, they'll be overtaken by the competition. And many times they were just, when the review work is going on, one director was helping other director was helping them. So both of them or the entire team was helping each other to get paid highly. So a lot of issues like this were happening. Therefore, this agency theory or agency problem becomes very important to understand. How we are managing this issue? So one of the way of managing this is through corporate governance. This is a risk actually. So one of the way of managing this risk is through corporate governance. We'll discuss that in P3. But if I just give you an overview, we have reduced the power of the directors. For example, we have made committees like remuneration, nomination, audit committee, and most of the committees doesn't allow executive directors to be part of that. So we have special watchdogs over them. And the NEDs are reporting everything towards shareholders. They are the eyes and ears for the shareholders, not the other stakeholders. So through that, they are trying to reduce it. However, just like any other risk, it's continuously evolving. So the corporate governance, the rules also will be evolving with the time. Then for profit entities, financial objectives, usually what are they? Do you need to learn this? No, just for understanding. Equity investors, the shareholders require returns from the company in terms of dividends and increasing share price. So obviously, the owners, what are the two ways the shareholders will earn? Firstly, the increase in share price, especially if it is in a company which is in growth stage. So shareholders will know that they will not make profit soon. They need time, but they'll be happy if the share price is growing. But if the company is matured, they'll be expecting profit, higher profit, and ultimately higher profit. They want dividends. So these are two ways we need to satisfy the shareholders. Yesterday we were discussing about the August pre-scene sale. So companies, we and our competitor, we gave almost 90% of the dividend, which is actually unrealistic to sustain that. But we don't know that was it one-off dividend they gave only for 1 year, or it was a continuous one. Many time companies give higher dividend to maintain the confidence or just keep the shareholders happy. If the share price is going down, then they want to give higher dividend just to maintain the balance. And that's what happened in the previous case study. The share price almost fell by 50%, and it was continuously falling down. So they give a higher dividend. So that may be one of the reason to balance that. Then finance providers. Who are finance providers? The banks, the financial institutions, loan creditors. They will primarily be interested in the ability of the firm to repay the finance, including interest. So they will be looking, what is your operating profit, how much you can pay back. They want to see the interest cover ratio, how many times you are covering the interest. Usually they want more than 3, more than 4, depending on the terms and conditions. Then financial performance indicators. Again, these are some of the basics. So when the PCN is out, when the numbers are out, we'll try to calculate some of that. We cannot calculate all because we'll not have the numbers, but some basic things we can do and we'll get an idea. So when we are doing financial analysis, we'll come back to the numbers again. Okay. But for now, you can understand the basics of that. So some of the importance are return on investors. What are the annual return on investors? The from shareholders, how much they are getting. Cash generation, very important. Companies might have so much of asset, but if they don't have a positive cash flow, it can be a problem. Value added, it represents the value added to an entity's products by its own efforts. Ultimately, business is what? We are receiving something, then we are giving something. The only thing why we are surviving is value adding. What value you are adding, whether it's a product or service, it's just input, process, output. So process is what add value we are adding, how much value we are adding. So what are the ways we are increasing the value we have added? Many times it's not the actual value, it can also be a perceived value, and that's what branding is all about. When you're getting a celebrity or any star, any person who is followed too much on social media or anywhere, does it increase the value of a product, the quality of the product? No, not even 1%. Does it? No. But still people are paying extra. Why? Because the value have been added. So value can also be perceived. And as we know, most of the humans will take emotional decisions. So just because of that emotion and the liking of that person, the value has been added. So we need to see in our business what are the different ways we can add the value. Certain times value add is done post sales. You have sold the product, let's say it's an automobile companies. So after sales service, that is the way we are adding value. This can be one of our core competencies. This can be one of the reason why our business is succeeding, right? So constantly we have to see how we are adding value to the customer or client's life. Then profitability, obviously how much profit we improve. This can be through return on assets, calculate on annual profits by average net book value of assets. You don't need to know any of the technical stuff or calculations, but obviously how many assets we have and how much returns we are getting. When we do capital expenses, we get a lot of new assets. How much we are utilizing. Sometimes what happen, we are not utilizing certain assets. So it's good to sell it off because it is getting depreciated, right? Asset can become a liability. And sometimes, let's say we have a big space, we are not utilizing it properly, so it can become a liability because we have maintenance cost, right? Then market share, gaining market share must be seen as a long-term goal of entities to ensure outlets of their products and services and to minimize competition. Ultimately, companies want to have higher market share. Why higher market share? My higher market share means higher sales, ultimately higher profit. So there are different strategies. Usually, some companies want to go with very low pricing, especially if you see startups. They will even sell their product in loss in the start. Why? Just because they want to get market share. And once they have market share or they have killed the competition, then they will increase the price. Right? Just 1 second. Yeah. Thank you. So market share. So what we are discussing is it depend on the industry how we are getting the market share. If it is a product, for example, if it is a FMCG product and all, you must have seen companies are actually reducing the prices to getting in, right? And if it is something with the technology which is new to the industry, companies even increase the price towards the start, and that helps them to get the market share. Or many times, if it is a new area and if it is a startup, there is almost no competition, so we can have maximum market share. However, we have a government bodies. So what can happen? Imagine just one or two companies are ruling the market. So if they both just decide on certain things, right? Let's say both of them decide there are only two companies that will not reduce the price. So or will just double the price. Anything unethical if they do. So what will happen? The customers actually will not have options. So therefore, countries will have anti-monopoly law. They don't want a monopoly to be there. So in UK, they say anything around 25% or more than 25% should not be allowed. Why? Because they want to limit the maximum market share they can get. Why? Because it will create a monopoly. However, we can get in a different countries. Competitive position. Sometimes it's all about competitive position also. Why we are getting all of those? What are the competitive position we are getting? How we are getting? It may be due to pricing, it may be due to after sale service, it may be due to, as we say, some endorsements. Anyways, then non-financial objectives of a company can be very simple, like company employees, we are giving them job security and everything, good working condition, health and safety. Health and safety. Then for companies, managers and directors, it can be goals will be both long term or short term. What can be the long term goal? Defending against takeovers. Many times when companies performing good, a big company can target to acquire us, conglomerate. Then short term can be obviously profit margin, working capital issues, and all of those. There's so many things. They have just given few of them, from payments, long term profit to maximize taxes. Community includes such aspect as legal and social responsibilities. Nowadays, this has become very important. Even in developing countries now, the customers are expecting that there should be pollution control. The company should be more, ethical, and they should not always prioritize profits. Environmental concerns, customer pressure, how to deal with that, customer satisfaction, all of those. Maybe I'd like to know from you. From we are not limited to any industry. What do you think should be companies' non-financial objectives, and how it can help us to achieve financial objectives? If you see indirectly, this is all coming towards our bottom line of profit. Maybe one point from each one of you. What do you think is a good non-financial objectives for a company, and how it can help us to achieve the bottom line? Is the question clear?
Yes, Misbah.
So I think there are a couple of examples I would. I'll just say if I can go on first, Ms. Vice, okay.
It can be motivation to employees,
Okay.
which lead to good performance in the operations, right? Which lead to financial objectives of the company. So, like that.
There could be the customer satisfaction and the loyalty side, wherein we have a satisfied and a loyal customer more likely to be a repeated customer eventually. having our increased volume or a revenue share, and the market share and profitability will tend to grow from a financial aspect. So a non-financial goals could be satisfaction of our customer and the loyalty of our customer, to a financial goal, which means the higher revenue as well as the market share and profitability from that customer itself.
Even though the
It
sorry. Yeah, you.
even how to manage their waste, like for IT company, how to manage their e-waste, and for manufacturing company while manufacturing the product, they have to manage how to manage their waste. These are the major problem nowadays organization are facing, which impact their image, public image. So to maintain that, they have to work on that, on this area.
Apart from that, corporate social responsibility can be the major role here. The company can get rebates from the government if they do CSR activities properly, like that, and it will be great way to do a non financial objective, which leads to financial objective of the company.
So
Every
if
company does CSRs.
yep, if I want to add one more point, I will say sustainability could be a game changer in current time where everybody is talking about environment. So if you are promoting it on a bigger scale, I think uh, it is a very good organic promotional thing for the company, which will eventually result in better profits and even the social picture or the image of the company, or rather the brand, will be intact and more concrete towards the people and the stakeholders.
Right. Makes sense. Anything else? Divesh, Fahim, anything you want to add?
Yeah, the confidential of the data, for example, financial service industry, if they keep the confidential of the data and everything, it will be create the market for the goodwill for the companies. Then we can see a lot of clients coming and a lot of investors coming, is lead to the profit for the companies.
What you want to do non-financially? What is your non-financial objective?
Uh, make more profit and get the more clients, get more investors.
Yeah, that is the advantage you'll get. I'm saying what objectives, how you can get it through non-financial strategy or non-financial work.
No, if I keep the data confidentially, the all the companies, then we can get the more client. This is right or wrong. Otherwise, if you provide the health and safety environment for the employee, they will motivate and it will be increase the production of the companies.
Okay. So basically, the non-financial objectives are not separate. Non-financial objectives are also ultimately helping the companies to achieve their financial objectives. However, it will take time and it is an indirect approach. Then coming to non-profit entities, usually the objectives are same, right? They will also have cash generation. They also need to add value. They also need to have some profit. They cannot work for non for profit. Return on asset, market share. They also have a market share, as we just discussed. They also need to be in a competitive position. Risk exposure. Important part is value for money. So this value for money, even for profit will use, but when it comes to non for profit, it becomes more important. Why? Because they have limited number of money. They have to be very effective when they are spending. So usually they are measured on three areas: economy, efficiency, and effectiveness, but sometimes equity as well. So what is economy? Minimizing the cost of resource used or required inputs. Basically spending less. You will not see their directors traveling first class because they'll say not for profit. We need to be economic. We cannot just do a lavish expense. Efficiency, whatever we are inputting, how much output we are getting. Relation between the output from goods or services and the resources to be produce them. For example, input is like number of students they have got into the school. Then efficiency is all about how many of them are actually passing, how many of them have passed the exams, like that. Then last one is effectiveness. Effectiveness, okay, you have done it, but what was the quality? Now, if the student have passed, how many of them actually passed with A grades? That will become a effectiveness. Relationship between the intent and actual results of public spending, that is spending wise. Third one is equity. It is not usually used to measure, but can be helpful. This is all about spending fairly. The extent to which services are available to reach all people that they are intended. For example, we are giving admission to less students. We have very less schools, and we are trying to achieve the effectiveness. But that means you have not got the equity. There are so many people in need of it. So you should also give opportunity to more people. Same thing will work when we go to international operations. So, firstly, why companies will go for international operations? Why we should go international? What are the advantage and disadvantage? What do you think for any business? Let's say some business is doing good in a country. Let's say country A. Okay, why do you think they should go international operations? What are the advantage and disadvantages?
The first one is market expansion.
Okay,
That should be the reason the organization go and opt for other countries.
To cope up with competition, because nowadays we are all globalization, so um, the scope of competition has been increased, and we have to cope up with that.
sorry, can you repeat last point?
Nowadays means we everything is globalizing, so competition has been increased. So to cope up with this competition, we have to enter into international market.
Okay,
Uh, in my
Increase
opinion,
the
oh,
profit.
you go ahead. No.
Yeah. Increase the profit for the shareholders for the advantage when you open up the more branches or more countries. Advantage. Disadvantage, if you open up the company in globalized, all over the world, you have the law and compliance. You have to meet different countries. You have different laws and the compliance. You have to meet it. You need to find the proper consultants to how to set up and everything. Therefore, it should be a disadvantage.
Yes, in my opinion, companies, all most of the companies have a last goal, like major goal to expand internationally because the market gets saturated if they are working in one place and going global. will give them to exploit certain opportunities which is core to their business, and it could satisfy the need of the new of the different country. So a lot of so this is the major advantage, that they could exploit the opportunity at the right time which is happening in a different country. And a disadvantage could be how a person could manage different ethnicity and different region person at the same time, and how the leadership thing will be framing up. So that plan, that initial stage, while a company is going global, that would be a big challenge. And there could be a lot of preliminary expenses coming in the early stage when they are going global, but the returns after this investment is like uh, massive. That's
Right. Anything else? Vishal, Anurag, you want to add anything?
So there are different aspects of looking into international operations. So I think one of the key thing is that while it opens the door, one of the biggest advantages while it opens the door for market expansion and getting into the markets which are untapped for a particular set of a business, it also focuses on the cost reduction. Like there are many places where we have a those are tax havens. So probably operating from those countries will actually bring in incentives. I think so. Cost reduction is one angle, market expansion and another angle, and then synergies of operations becomes another, because when we are talking about different set of technology and the market space, it also complements the business what we are into. So those are some things which I think could be advantages. I think the flip side is obviously when we do all such steps, there are certain inherent risk to the overall process of first of all the overall fluctuation in the market. So that's another one. So political and so geopolitical and economic factors plays a very important role as part of our, and becomes a disadvantage some point if in case it's not handled appropriately. And then the fitment to the overall culture of the firm becomes also challenging at times when there is not enough efforts made on the change management. So I think those are few thoughts which I can think of at the moment, right? But there are others as well, right? So be it another on the cost side also, if the market is moving up and down, obviously there are other factors which can increase the cost. That could be another disadvantage to look at. But I think fairly speaking, it depends on how we assessing the situation and probably at what time we are making a decision of going international and opening up international operations for any given company. It depends on what time we are making this decision.
Right. Many times it can be just opposite of that. In one of the previous exams, we were not making a good profit from one of the countries, so we thought of just divesting that part of business. That is also a question in relation to international operations. Not only that we are growing, sometime we have to roll back. Okay. What are the strategic implications? You see this word, no, this word has been a lot of time used in the exam question. We'll come back to it again. Strategic implications. So basically here they're talking about how it will affect the entire strategy of the business. Because when you do something new, one project can affect the entire business. We have seen so many cases in the real world too, and because of one risky project, the entire business collapse. When you are doing something new, you should be very careful. The proper risk assessment should be done. How we'll take care of the current business, current operations, and how we are dealing with the new one. So what are the basic things in the strategic implications? They're talking about the competition. Sometimes the competition can be higher than the local country. Some can it can be lower. The country factors. Many times we are just going out because of country factor. Let's say a company is outsourcing their manufacturing to China. So that is probably because of the country factors, because they have skilled labor, comparatively cheap labor, and good infrastructure, good logistics support, all of those. Benefits to the customer. Sometimes the rising customer might also benefit. For example, now in India, a lot of people have started using Apple compared to maybe 5 years back. Now Apple has started doing a lot of business in India, so they have uh, plan or they have already started doing assembling points in India, and they're investing more in India. Why? Because they are coming closer to the customer, and if they have assembling point there, then the cost will also come down. So that is an advantage of strategy implication. It is benefiting the customers. Then economies of scale, international expansion might be the best way of continuing to great economies of scale. Economies of scale, usually when you do in bulk, it can benefit us. Again, having said that, we are looking at the positive side, but all of those will have negative side as well. Financial implications, foreign project assets are dominated in foreign currency, they'll have to be converted. So we'll have to take care of the forex and all of those translation risk, exchange risk. We'll see this specifically in uh, F3. The impact on cost of capital, how it will affect overall cost of capital, how we are raising the finance, how it will affect all of this. These are some of the ratios. So we have to understand that every stakeholders will have their different ratios. For example, if you are the shareholder, what you'll be looking at? You're looking at the profit, you're looking at the share price, you're looking at ultimately how much the company is doing. So if you are a shareholder, let's say investor, what you will look at? You look at EPS, earning per share. What is the earning per share? You look at earning yields. You look at the dividend payout. You look at dividend yield. What are the dividend cover? What is the earning growth? Isn't it? Same thing with the lender. Lender is not interested. Let's say a bank. Bank is not interested how much dividend you are giving. Yeah, they might be interested if they're giving higher dividend and they don't have money to pay the debt and the interest, right? So firstly, they'll be looking at the gearing. They'll be looking at the interest cover. They'll be looking at the debt. In profitability ratio, everybody will be interested. Even as an employee, will be interested in profitability ratio, gross profit margin, gross profit, operating profit, return capital employed, asset turnover. So basically, every stakeholder will look at a different perspective. So as a company, what we need to do, we need to maintain certain ratios. Sometimes what happened, company is making good profit, we are in good position, but maybe the ratios are not good. For example, we don't wanted to give dividend, let's say last 2 years, so we have given them scrip dividend. What is scrip dividend? Scrip dividend is like giving free shares. So what will happen after that? Earning per share will reduce. The wealth of the shareholders are not affected, but the earning per share will reduce. The share price will reduce, isn't it? Because now we have same value of the company, but there are more number of shares in circulation. So we need to maintain the ratios because these ratios are giving signal to the market. Are you getting the point? So it's our responsibility to maintain the ratios, and we have to understand. Now, another factor is sensitivity of the attainment of financial objectives to change in economic and business variables. In fact, in the previous exam, one of our business center internationally want to divest it just because the economic situation was not good. Especially if you're selling products which are not basic need. Now, there are two kind of products. One is need and one is want. Need also we can say very basic need like food, clothing, and shelter. So when the economic situation is not good, definitely the business who are in basic needs, they will survive maybe with the less revenue and everything. But luxury products and want stuff, which are not mandatory, might reduce. So if there is an economic thing, whenever there is an, let's say there is a recession coming in, or the inflation is very high, so government wants to control it. How government control? They will control through central bank. They will reduce the interest rate. They'll increase the interest rate depending on the situation. If it is an inflation, then they will increase the interest rate because they want less money circulation. So ultimately, the price can come down. Anyway, so what happens in the economy when the things changes and how it will affect the business? Remember, we are doing this macro environment analysis to see how it will affect the business. Based on these decisions, lot of brands will exit the country and lot of brands can enter into the country. For example, if you see in Dubai, we have most of the luxurious brand, almost every brand is there in Dubai. Why? Because people can afford there. The economic situation is strong. But you'll not see the same number of brands in Nepal or any small country where the economic situation is not good. Because they know the number of buyers are very less. And for a small fraction of buyers, they can come to Dubai and buy. They are anyways traveling outside. So what are some of the things? Effect of, let's say, the change in interest rate happens. So spending will fall. Let's say if the interest rate goes up, so what will happen? The spending will fall. People will not have money. The credit will become difficult. Asset value will fall because you don't have a lot of buyers. Again, the value will reduce. Foreign funds are attracted into the country. Why foreign funds? Because if the interest rate is increased, they'll think like, okay, I'll do put money in the bank and I'll get the higher interest. I'll do fixed deposit kind of thing. The exchange rate rises. Remember, whenever there is a higher inflation in any country, so the exchange rate will rise. The country's currency will reduce. Inflation falls. Actually, why government will increase? If you have a little bit idea of interest, the economics. So why government will increase the interest rate is to reduce the inflation. Because if there is more money, then because of more spending, the price can go up. So inflation will fall because of the less money in circulation. But having said that, this can be a problem for the businesses. They want more and more cash flow in the economy. Now, how it will affect? Obviously, most of the business won't be happy. However, if you notice the big conglomerate, they have been very cleverly putting some part of their business or diversifying their business into an industry which is almost recession free. For example, if your business into education, if it is into healthcare, healthcare is always required. If it is into, let's say, alcohol, people are addicted to it. So things like this will go even in recession. There are a lot of buyers available for that. So companies want to diversify in those type of business. So if some industries are struggling because of recession or the economic situation, they'll still sustain from the other part of the business. And obviously, it is required to be in that industry which is risk free or which have less risk related to uh, economic crisis. Even if you see in the real world, when companies are operating for, let's say, 3-4 decades, most of the companies become conglomerate. What is conglomerate? When we are doing business in different industries, let's say one is into steel, one is into telecom, one is into logistics, that becomes a conglomerate. They are not limited to one industry, because when we study risk can be affecting the entire industry also. In order to do the risk management, they'll go in different industries. Imagine companies who are into airlines. Okay, let's take 2 examples who are just doing airlines during COVID time, and other companies again COVID time, airlines plus they were into healthcare. So companies which are doing airline plus healthcare, they would have been in better times compared to companies who are only into airlines. So this is how they have to manage. This is how we have to manage the risk and sustain a business. This is the reason why business don't live forever. If you notice, there are very few businesses in the real world. Just like a human being, they'll also die one day. Very few businesses will work more than 100 years. Why? Because of the risk management, because of the planning, because of the diversification. And companies who are operating more than 100 years, if you see, they are more ethical, they are more towards society. People have so much of trust towards them. For example, Tata Group we have in India. So very few companies are there, and they are not focusing only on profit. They're focusing on people and planet simultaneously. And obviously, their business is very well diversified. Is it making sense, all of you?
Yes, bhai.
Okay, what do you guys think? How we should diversify? Let's say we have a business in logistics or anything. Which other industry you want to go in? Which you think is less risky in terms of economic crisis? Let's say you are expected to economic crisis in a country. Now you want to diversify into new industry. So, and you can go only to one industry. What it will be and why?
If I have to say, if a company which is into copper, uh, they they make copper utensils and other things, there is a lot of wastage which happen, and that wastage, there is like wires in tech made of copper, so they could diversify into a tech brand and give some raw materials for that. So like a component of other company uh, could be a useful for a different. So when they have this relationship, like when they have this the components can be used for different things, it will save some money also, because there will be some divisional or uh, intercompany transactions which could save money and make profit for the company. Sorry.
Sorry, can you repeat the last point? Karan?
Yeah, so
Sorry.
I was saying when the components can be used in different sectors, it is a cost reduction thing, and they could make more profit. So I was relating the copper thing with the copper wires, and if they are making utensils.
Good point. So we are using the same raw material, similar supply chain. Very good
Yeah,
point.
yeah.
Others, I'll be happy if everybody can answer this.
The
Whatever comes
current
to
set of
mind.
sorry, Misbah, I didn't hear the question very well. The current set of industries into which sector? Like which the current set of company industries in which sector?
Uh, uh, yeah, so current set of industry can be in anything, Vishal. Let's say
Okay,
logistics,
okay, okay,
security,
okay,
anything.
okay.
How we can diversify to minimize this economic risk? What should be the
Got it.
second industry? Yeah.
Okay, okay.
Uh, I have like one more point, like BPO
Yeah,
sector
please.
are also going are tend to become a KPO as well, where they were only providing customer service. They are also enhancing their scope of work, doing some accounting, financial services as well, consultancy. So I have seen this thing in a BPO industry. They from a BPO they have turned into a KPO, where there are mix of, because in both the case the thing is like it's a people thing to manage. in both the business models. So I've seen a lot of BPOs turning into KPOs and enhancing their wealth for the shareholders and different stakeholders.
Right.
Like a construction industry who's building the construction, they can go for the building material, then they can give for the consultant service for the client, and they can move the rental, the equipments, rather than doing only for the construction buildings or roads.
Right. So this is one way of diversifying, Fahim.
Yeah.
This can be correct. My exact question is: imagine there is an economic situation. There's a economic crisis happening in the country. The GDP has been reduced during those time.
Okay. During those time, they stopped. Mm, no, I'll come back.
Okay. Divesh,
Do you guys mind if I polish Hayata's point? Sorry if your name.
sorry, Manmit.
Hayatu's point, it was a good point, but if I could polish it in a better way, I would say if a construction company is only constructing, they could go into PBSs where they are constructing and and lending those property to other people, and this will help like people, not only PBSA, they could rent flat also. They can build huge buildings and rent them out, and at the end of the day, what will happen? The mortgage, the banks will be happy because people generally take loan, so the mortgage will go. So as if you'll see the bigger picture, he will grow. Does it make sense? Like a person
Right.
who used to do
Though it is a
construction for
little
the
risky
team,
approach.
what he did, he booked the land, he built the construction, he built the building. Now what he's doing, he is lending that property to like other people. And if you see the bigger picture, people who want to buy the flat, they need to do, they'll take loan and everything. So at a bigger picture, the GDP will grow.
Right.
I hope I made sense.
Yes,
Just
yes.
trying to connect the dots with Hayatu's points.
Misbah, there is one example that if we are in tour and travelism industry, so we can diversify in health industry. So during the any economic crisis, like there is impact on tour and travelism, we can have alternative like health.
Healthcare, you want?
Health care, yeah.
Right. Healthcare is definitely a good business, even in economic times. Let's say if people don't have money, in the worst cases, government will pay for that because government responsibility to take care of the citizens. So they'll be doing the grants. The cash flow will come in this industry automatic. Okay. Anybody else?
I was thinking, Misbah, on the technology side, right? So a technology company can diversify into a healthcare sector, thinking in lines of, getting into the healthcare by developing few medical devices, software, machines. So that way, we are not just completely into technology, but also our presence in healthcare industry, which will continue to evolve.
Good point. The companies, those who have their ERP and their application, they are being excuse me.
Yeah.
They might have clients from different industries, right? So if they have clients from industries, they'll have their revenue coming in. Yeah. Divesh, want to add?
Yeah, like for example, if we are manufacturing car manufacturing company, yeah, and I feel like if we do the backward integrations for the diversification for some parts where we can't able to get because of some political issues or the economical issues, maybe we can try to acquire small company within a country or somewhere where we can make we can get a product as a very cheap cost, and also we can start selling another supplier as well as we can able to boost our profit as well, and we can diversify business into another field as well. And another, I think, like suppose our we are dealing with so many international customer, and due to our economical issue our currency is going down, we might open new bank account in the current whatever 2 3 different currencies, and we can wait for the our economical stability, and then we can transfer those particular money into our account. That way we can also make it little bit translation profit as well. So this is what I am thinking. I might be wrong. Yeah.
Right. It makes sense. The last one also makes sense. We can do it in the more stable currency. Good point. For example, entire Middle East, they have locked the prices with the US dollar, 3.66 something. So whatever happens, they are okay. And most of the world reserves are in US dollars. So that way, they have managed the risk, country wise also, business wise also. Some more points: effects on inflation, distorts customer behavior. Obviously, we will go for basic things first. Redistributes income. People are with fixed income, they'll struggle more. Affects wage bargainers. Now, employees will be expecting higher salaries, higher wages. Undermine business confidence. Business will be little bit reluctant to take a long-term decision now because there is so much of volatility. Weakens country's competitive position. No more FDIs are coming in. It can also redistribute wealth. So there are so many points. There is one formula here. We don't need to again know this, but usually this formula is giving an idea of what can be the future interest rate. So what is the logic behind it? The logic is the inflation. If the inflation is higher, the interest rate should be higher than that. Let's say the current inflation is 6%. So definitely bank will charge you more than 6% interest rate. Otherwise, bank will go in loss. Let's say they are charging 9%. So if you notice, actual interest rate is 9, but out of 9, it's only 3 because 6 anyways is inflation. There are certain theories. We'll see that again in the later chapters. Any questions in the first one so far? There was not much to remember. It was more of, I would say, a revision or a quick go through. The important things here was about the agency theory, which you need to remember. Then different stakeholders will look at different ratios. Then we also look at NGOs and different stakeholders, which are part of the business. And another one was the type of business what we are operating. Sometimes, in one of the scenario, our company was unlisted, and the question was that we want to go for listing. What are the advantages of being a listed company? So we need to be very clear with some of the points, some of the facts of being listed versus unlisted. And the same fact can be used when you're acquiring a business which is listed versus unlisted business. Okay, we'll finish this non-financial objectives also today before we close for the day. So non-financial objectives. So basically, this is where the things come in. Uh, what are the limitations of financial statement? How this starts? So when we see any financial statements, even if you see somebody who understand basic finance or somebody who is just not aware of the financial terms, what they look at? They look at the financial statements. They look at the profit and loss, the balance sheet, right? Statement of cash flow. It might show a very good profit, but what might happen? Maybe the next year company can go in loss, or maybe it can go very bad. This year it was profit, and next year they're out of business. This can also happen. Why? Because we don't have a lot of information. We have very limited information, and many times the accounting information can be manipulated, right? We have word called creative accounting. They can do creative accounting, and they don't have other information. Maybe this year we have succeeded because we have the top talent with us, and next year the CEO and some of the directors resign, and then we don't have that explicit knowledge with the new directors in the team, right? Or maybe our relationship with the society was getting deteriorated every year, and now it has come towards very bad patch. So again, businesses can have problem. So more or less, here we are discussing about the limitations of the financial statements. Financial statements are important. Yeah, they are super important. But are they enough to make the decision as a shareholder, as an investor? No. There are a lot of things that are hidden. As a company, companies usually don't want to give more and more information, even to their shareholders, because if they give, there are so many things they'll question on. Things will become public. Media will be posting on that, right? But the United Nations, with the initiative of Global Reporting Initiative and the SDGs, what I was talking about, they all are focusing on giving more information to the investors, more transparency in the business to reduce the fraud, to reduce the risk. They have given just two limitations, but I know if we discuss, we can add like so many, tens of those. Financial statements have traditionally only reported the financial capital of the companies. They don't reveal detailed information. The type of corporate reporting no longer reflects the need of users. So many things. So, what is Global Reporting Initiative, or it is also known as GRI? So, basically, their aim is to give more information, more clarity on the top of the financial information. So, how it will help? It will help to reporters prepared sustainability reports that matter, contains valuable information about organization most critical and sustainability related issues. So when it comes to sustainability, a lot of students thinks it's only about environment. Sustainability means simple word sustainability. Sustainability in terms of profit, sustainability in terms of having a good relationship with the supplier, good relationship with the society. Yeah, environment is also one of the part, but it's not only environment when we talk about sustainability. Okay. So how we can give more valuable information? If I go back to the same example, then we have to talk about the top directors. If they have left us, that need to mention. If we have good relationship with the society, we need to mention. If we have bad relationship, we have to mention how we are dealing with the capitals. Capitals, as in they have talked about some six capitals in the later page. We'll see. So there they'll talk about how we are dealing with finance, how we are dealing with intellectual. In certain business, especially service industry, intellectual capitals like goodwill, patents become super important, and we have to continuously keep getting more and more patents or licenses, because they also have a time limit, right? And if we don't have, we might lose the competitive edge. We might have this still here, but next year if you're losing the license, definitely our revenue will come down and affecting the profit. So these things need to be clear with the investor. If I am the investor, I need to know. I thought your licenses were so long, but I didn't know that it ended this year, and I invested this year by saying the last year profit or this year profit. Something like that. You're getting the point. So more or less, we are giving more clarity. We are giving more uh, power also in such a way to the investors to the finance providers, to the stakeholders. Does it make sense? Excuse me.
Yeah.
Imagine we are doing the pre-scene analysis. CIMA is just giving us the numbers. Can we do the analysis? Would be difficult, isn't it? Therefore, they give a lot of write-ups also. They give background about the industry, background about things, some news articles, background about the board. Now, instead of pre-scene, you just think like as a report, you're investing in the company. One is just numbers, and another one is all this detail of 26 pages. So obviously, in the second scenario, in 26 pages, you'll have more information, better idea. You know the principal risk. You know the board of directors. Imagine we don't know the board of directors, and later on we found that board of director is maybe the son of the founder, and that guy don't know anything. Just because of his father, he got that position. So definitely, that team is not competent. Will not invest there. Right? We want the merit to win. And having said that, we cannot just keep on giving so much of information. So that should be material information, major information. So materiality is placed at the center of the new sustainability reporting guidelines issued by the GRI, the so-called G4 guidelines. So what it aims to improve the common language of corporate reporting, focusing heavily on the issues that are material to the organization and important for stakeholders. They have not used the word shareholders. They have used the word stakeholder. That means we are prioritizing shareholders, but we are going beyond that. CEOs worldwide have identified the need to build public trust as a crucial part of improving operational efficiencies and engaging with customer following the financial crisis. So transparency is very important. Trust is very important. Now the clients, the supply chain, everybody want companies to be transparent. They want to know where it is coming from. Maybe companies are being very ethical in certain countries because of the culture, but where they are sourcing their raw material, maybe they are not even paying them the minimum wage. Right, the workers are living in a very bad conditions. So that is also part of supply chain. We need to contribute that. That transparency is also required. So GRI is promoting non-financial reporting. G4 does not reward reporting large quantities of indicators, but it will report more of material disclosures, main points, not just giving so many things. So these are the steps. Do you need to remember this? No, it's just for understanding again. Sometimes they ask this question in individual F3, but you guys are writing case study, so you don't need to worry about it. So what are the steps, the purpose of the guidelines and how to use the guidelines? Criteria to be applied on organization to prepare sustainability report. Reporting principles, these are important. Stakeholder inclusiveness. We have to consider all the stakeholders when you're writing about it. Sustainability context you talk about. Materiality should be there. Not everything we can write. Completeness. We should not give incomplete information. Why incomplete? Why not incomplete? Because incomplete can give different assumptions. If there is no conclusion, everybody will make a different sense out of it. Another principle is it should be balanced, it should be comparable, it should be accurate, it should be timeless, clarity, reliability. If you see, we have all these characteristics in the financial report. All the companies need to prepare in the same format. Why we have IFRS? Because it should be comparable, it should be reliable, it should be clear. We don't have a proper standard like IFRS here in this. Therefore, they are coming with this basic. But definitely in the coming future we can see there will be a proper standard with this, how they need to do, how they need to present, how much they need to write. So this is into work in progress, and they might have to disclose on the strategy analysis, organizational profile. Obviously we are not telling companies to give their confidential information, but they need to give some idea, they need to give more transparency. For example, again, if I go back to the economic risk, everybody know that economic risk is a situation is not good in certain countries, let's say for 2 3 years, and that time they are reporting this. So they have to give at least basic idea how they are dealing with that. Do they have plan for that? Do they have sustainability capability? Are they able to take up some risk? Are they able to absorb certain losses? All of those management approaches is also very important. This links and definitions key terms. These final sections show how G4 guidelines link to other important sustainability reporting guidelines such as OECD. What is OECD? Organization of Economic Cooperation Development. Again, this is an international body, with the UN, and they are working on human rights. Human rights and rights of the organization, all of those. More or less, if you want to understand, we can think like a triple bottom line. What I was saying, everything is coming down to one thing: triple bottom line. What are the triple bottom lines? What are the three P's? Can you tell me? What are the three P's for the business? What are the three bottom lines for the business?
One is the people, profit, and
People, profit, and
I-
planet.
Simon.
Good. So people means here they have put the word, instead of people it is put social. Instead of profit they have used the word economic. And instead of planet they have used the word environment. So more or less is the same. So profit, planet, and people. Profit means economic they are talking about, planet means environment, and people means social. So more or less, even here they are relating it to the same thing. So we need to report on economic performance, market presence, indirect economic impacts, procurement practices. These are some examples. It can be so many things. Now a similar way for environment. What are the materials we are using? What energy we are using? Are we, using water? If you're using water, how we are taking steps to save the water, purify the water? Are we affecting biodiversity? How much our emission is? What we are doing to reduce the emission? Nowadays you will see a lot of companies, the top companies, their new vehicle fleet is replaced by electric, right? Why? Because of this environmental impact. They want to say that they are reducing their emission. There is also a term called carbon neutral, carbon negative. They want to reduce their carbon footprints. How they are dealing with the waste, all of those. Social means it will also include our own employees, labor practices and employees, human rights, dealing with the society, responsibility of the product. Sometimes certain products can be misused. For example, a company selling alcohol, they have to see the IDs. They cannot give it to somebody less than 18 years or 21 years, depending on the country they are. So responsibility should also be there. The process of putting together a report in accordance with GRI guidelines. First, we have to identify it, prioritize it, validate it, review it. In the exams, if they ask you, they'll ask you what are the advantages of integrated reporting or advantages of this GRI. The word itself, integrated reporting is again part of GRI. The word itself give you an idea. Integrated, that means integration of what? Financial and non-financial. And what is non-financial? If I say financial is economic, like here, the non-financial will be people and planet. Integrated reporting is to try to create a more holistic and balanced view of the company being reported upon, bringing together material aspects such as strategy, governance, performance, and prospect in a way that reflects the commercial, social, environmental context. Again, commercial, social, environment. Instead of economic, they have used the word commercial. Value creation for the organizations, the capital, the value creation process. Anyways, the most important thing is the capital. Usually, the companies are motivated to report on these capitals. So I would suggest you, if you can learn these capitals, just the names will be helpful for us. Because when we are reporting, we need to report on these capitals. Not all of those, depending on the company. Let's say if it is a service business, they might not have manufacturing, so they don't need to report on manufacturing capital. So what are they? First, financial capital. Financial capital means how much money we have, right? How much capacity we have to raise the money, how we are dealing with the money providers. All of this will be part of financial capital. Manufacturing capital, what are the capacity we can manufacture, what levels of equipment we are using, is it latest technology or it is outdated, how much machines we have, what is the bottleneck, everything with the manufacturing. Intellectual capital, what intangibles you have, how much licenses you have, patents you have, softwares you have, when it will expire, what new you have applied, what R&D you are doing. If you see any business, manufacturing, service, anything, anywhere in the world, the market leaders usually do a lot of R&Ds. They are coming up with the new things. So when they're coming up with the new thing, it's not like they do 10 R&Ds and all 10 will succeed. There's a chance they will do 10 and 9 will fail. Maybe all 10 will fail. They have to do again new. So what is in the pipeline also matters. Then human capital. How competent people you have. What are their capacities, capabilities, what are their experience, how motivative they are. Because many times if the organization is not good, people don't want to stay there for a long time. They just want to get some experience and switch. Just like we have a ratio, churn rate. What is churn rate? Is number of clients we are using losing. Same thing we have for employees. We have the ratios, how many employees, staff turnover, how many of the employees are leaving us. We are not making them go, they are just leaving us. What is the reason? Is it the culture? Is it the remuneration? Is it the career growth? Many companies fail to do the journey management, like we are discussing yesterday also. So they will switch. Then social relationship capital, how we are dealing with the society, how is our relationship with them. Maybe they are not our clients, they are not our employees, but indirectly they can have a say, they can motivate the government, and government is powerful. Natural capital, how we are dealing with the nature, renewable versus non-renewable. What we do with the renewable, if we are like using wood as a raw material, so how much tree plantation we are doing, that is renewable. Non-renewable means we are using fuel, fossil fuel and other fuels, right? So what we are doing with this, so we have to report on that. Make sense? Technically, yes. Technically, only two things you have to remember, important things in this chapter. First is the triple bottom line, which you already got an idea. And second was this capital. It's better you learn the name of these six capitals. And what do they mean? What do they mean is very easy. The name itself is self-explanatory. All right. An integrated report should be designated, identifiable, communicated, should be more than just a summary of the information. It must explicit the connectivity of information to communicate how value is created over time. Ultimately, business is all about creating value. An integrated report may be either a standalone report or be included as a distinguishable, prominent, and accessible part of another report or company. For example, it may be included at the front of report that also include the entity's financial statements. So you can do it combined. I'll suggest you to go through this. You can just read on your own also, chapter 1 and 2. So you'll get more idea. Okay. Then the next part towards the conclusion is about management commentary. If you see in financial also, we do write notes in the financial statements. If you see any company's financial statements, same thing come here in the commentary. So basically, when they're trying to follow certain kind of format, if they have missed something, so whatever they want to make or what talk about. So basically, their personal comments. For example, they will say in financial we have used this approach, in intellectual we have used that approach. So basically, comments to understand the report in a better way. So commentary will help to understand a better way for the reader. And for the writer, it is a way to convey the message more clearly. For example, management commentary, second point, is a narrative report that provides a context within which to interpret the financial position, financial performance, and cash flows of an entity. Explain the objective and strategies, element of their communication, why they have written in such a way, right? Maybe commentary can be different for different countries also, just to make it more understanding. Future development. Due to voluntary nature of these disclosures, their impact and effectiveness will depend on various factors. Ultimately, it will have value. If you compare this to finance is relevance, yes. Finance is reliable, yes. Financial reporting, when I say finance, is it comparable? Yes. If you take any company's report, we can compare to their competitors or even outside the industry, anywhere in the world, right? Same thing we are trying to achieve for this: relevance, reliable, and comparable. Now, recently, the United Nations have come with sustainability goals. It is called 17 SDGs. So the background behind this is they are saying, as a government, the government is doing a lot of things, but still there are certain companies who are more powerful than the government. The companies also have to take initiative to make a world better place. For example, Coca-Cola. Coca-Cola is there in almost all the countries. And I was watching some documentary. They are saying 60% of the plastic water bottle found globally is from Coca-Cola company. Can you imagine? So single-handedly, they are responsible for so many things. So if that company take a pledge to work towards better environment, they can do a lot. They're talking about recycling, but less than 6% of their bottles are getting recycling. All of them are going in landfills or in the oceans, water bodies. So United Nation has come with sustainable development goals, and if we watch it closely, again, these goals are focusing on the two P's: people and planet. I have a good video for this. I'll just share it after the class, but you can quickly have a go. So companies adopting and supporting these goals can see many long-term benefits. So they are saying this might be expensive. It is, because it's not mandatory. Not a lot of companies want to do it, but if they do, they are benefited by improved reputation, healthier and more skilled workforce, greater growth opportunities, continued supply of raw materials and sustainable source, reduced risk of regulatory breaches, because we are doing more than requirement. What are they? They are, what are the 17 SDGs, Sustainable Development Goals? They are: no poverty. We have to work towards to avoid poverty throughout globally. Zero hunger. Poverty means at least they should have food, clothing, and shelter. But even in that, food is most important. So zero hunger. Good health and well-being of our employees and society. Quality education for everyone. Reduce inequality. If you see, you know, in the world, less than 1% of the population owns more than 99% of the asset globally. And I think 20 years back, it was 5% or 10% population holding more than 90%. But now it has become different. Maybe in the coming future, maybe 0.1% population will have 99% of the asset. There is so much of inequality. The middle class is shrinking. We have rich, we have poor. So definitely companies have to take some initiative with that. Clean water and sanitation for everyone. Affordable and clean energy. Energy prices being so up, a lot of people, especially in the villages in undeveloped countries, they cannot afford. Decent work and economic growth. Work opportunity should be there, and everybody should have an opportunity to grow economically. If you see the farmers, usually they struggle. They are working the most hard part, but the business just putting their brand, they're earning the higher profits. Induce innovation infrastructure, work on the innovation infrastructure. Sustainable cities and communities we should work on. Responsible consumption production. What is responsible consumption production? Because once our product, let's say we are making a laptop, so once it is used, let's say for 3 years, 5 years, so do we have anything to recycle it? Are we doing anything with e-recycling, electronic recycling, right? What will happen once it's consumed? What will happen with the waste? So we should be very much responsible. You might have seen some of the companies now, they are doing packaging that actually I used one bottle recently, and it was written on that after some time it will automatically, you know uh, uh, what is that? It will go in if you put into, let's say, a plastic bottle. If you're putting into, it will take at least 100 years something for getting diluted. But this bottle, they said in 2 to 3 weeks, it will get broken, right? And it will get absorbed. And everything used in that bottle, it looks like plastic. It was not plastic. It was all natural material. So that was an example of responsible consumption production. Climate actions, climate change. We are saying life water below, life below water. So we need to take care of uh, those also. We cannot just pollute the water. Peace, justice, and strong institutions. A lot of places the bribery and corruption is so high, people are not getting justice, or getting justice is very expensive. If you go to a court, you have to pay very high to the lawyer. Then you have to, you know, spend so much money on other expenses. So a lot of poor people, even if they are on the right side, they are not going. For example, even in India, if I talk about, unfortunately, there are like millions of cases they are just pending for decades. Then partnership for goals. Companies should partner with the government, partner with their competitors, partners with other businesses to work towards this. Gender equality, they have to work towards gender equality. There should not be a pay difference and all of those. Life on land, like just like life on water, life on land means we are talking about the animals, the wild animals, and all of those. If the infrastructure is being built up, we should take care of them. We should not affect their wildlife. So this is something that companies have to take responsibility to work on. That's it. Makes sense? Any question?
No.
No.
All right. So a lot of things were maybe you already know it, but it should be a good revision, and you have got a new perspective, I believe. So please read it once again, okay? And read the next two chapters also, which we'll do in the next class. And I'll be sharing a couple of things on the WhatsApp. And if you have anything, you can get in touch with me. So that's it for today. Then we'll see you.